All right, let's talk about a company that is just everywhere right now, Oracle. I mean, with all the buzz around AI, Oracle is being treated like one of the biggest winners out there. But is the story really that simple? We're going to look past the headlines and see what the numbers are actually telling us.
You've seen the headlines, right? It feels like every day you see something like this. The story out there is that Oracle is this unstoppable AI giant, and its stock is just ripping higher. The whole narrative is completely captured by AI.
And just look at this chart. That optimism is written all over it. The company's stock has been on an absolute tear, especially over the last few years. It's a rocket ship, plain and simple. This is what major investor confidence looks like. But that brings us to the real question, doesn't it? We see this shiny, high-speed exterior, but what's going on under the hood? Does the financial engine of the company actually have the power to back up this incredible race to the top? So let's do that. Let's pop the hood and take a look, because some of the financial data, well, it tells a very, very different story than what you're reading in the headlines. And bam, here's the first thing that just jumps right out at you. While that stock price in blue is shooting for the moon, a really key measure of how profitable the actual business is, that's the return on invested capital in purple, has been going steadily downhill. I mean, look at this. These two lines are telling completely opposite stories. So why do we care about this ROIC thing? Well, think of it like this. It's a report card for how good a company is at making money with its money. And when you see it falling year after year, it's a huge warning sign that the fundamental business just isn't as strong as it used to be. And the warning signs just keep coming. Look at the company's debt. For most of its life, Oracle kept its debt at a really safe, manageable level, around 1x its earnings. But in just the last few years, it has exploded. It's now over 4x its earnings, which is a massive jump in financial risk. This chart really drives the point home visually. What used to be a pretty manageable gap between their cash in green and their debt in red, well, it's not a gap anymore. It's a chasm. The amount of debt they have now just towers over the cash they have on hand. So you have to ask yourself, what on earth is going on here? We have a stock price that's soaring, but at the same time, the business is getting less profitable and debt is just skyrocketing. How does that happen? And the answer, it turns out, is a massive company-altering bet. Oracle isn't just making a few small changes, it's going through a fundamental transformation, and it is all about AI. Okay, so here's the play-by-play. Oracle's old-school core business was starting to weaken, so to fight that, they decided to go all in, making this enormous bet on building out AI infrastructure. And the absolute centerpiece of this whole thing is a massive contract with OpenAI, reportedly the biggest financing project in Oracle's entire history. But a bet that big creates a powerful domino effect. They have to spend so much money to build all this stuff that they're expected to actually be losing cash, negative free cash flow for the next 5 years. That, in turn, keeps their returns low and pushes that debt level even higher. And you know those stock buybacks that investors love so much? Forget about it. With no spare cash, they're off the table. And this right here, this is the real bottom line. The green line is what Oracle earns on its money, and the red line is what that money costs them. That gap between them, that's the value they create. And as you can see, that once healthy gap has basically collapsed. It's gone. They're struggling just to break even on these huge new investments. So what this all means is that we have a whole new reality for anyone looking at this company. You have to understand, this is not the same Oracle from 5 or 10 years ago. Investing in it today is a completely different bet. And look, when you stack Oracle up against its competitors, you see this giant green bubble way up high. That's them. What that means, in simple terms, is that investors are paying a huge premium for Oracle's future growth, way more than for pretty much any of its rivals. The market has priced this company for absolute perfection. So, the outside market is clearly betting big, paying top dollar. But what about the people on the inside? The executives, the people who know the company best? Are they buying into this story with their own money? Wow, I mean, this chart speaks for itself, doesn't it? It is just a sea of red. Red means selling, green means buying, and for years now it's been almost nothing but consistent, heavy selling from insiders. They are not buying the stock at these prices, they're doing the exact opposite. So it really comes down to this. There are two Oracles. You had the old Oracle, a super profitable, cash-gushing software giant with low debt. And now you have the new Oracle, a high-risk, high-debt AI infrastructure play that's actually losing cash. They're just two fundamentally different animals. And that leaves us with this final, critical question. When you look at that incredible stock chart, is the market really pricing in all these new risks? The debt, the negative cash flow, the total change in the business model? Or is it simply mesmerized by the powerful, exciting promise of AI? That's the real question you've got to consider.